Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And I want to welcome you. Welcome to this midweek. Today's Wednesday. And look, we're getting data sets here and there, and actually some quite important economic data sets from various top economies. Look, in general, the kind of the main dominating topic is jobs. In addition to wages, and of course inflation is also a key important element of this week's economic calendar. Now look, I'll talk about that a little bit more in the session right now, so stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. Alright, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is the 18th of February 2026. Today is Wednesday, midweek. What else to add to this? It's another, it's not the last week of February. No, we still have one more left. So yeah, we're kind of in the middle, I would say, of everything. Look, this week is basically filled with economic data sets. It's filled with wages, jobs, inflation numbers from various top economies. We'll look into all that, but look, apologies for my voice maybe a little bit because it's still cranky because excuse me, it's still a little bit cranky because I was sick last week, but yeah, it's hopefully I'm going to get there anyway eventually. Look, ladies and gentlemen, before we go any further, as always, we need to have a quick read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to put my usual good morning in the chat room. Good morning, everyone. So I have to remind everybody again, ladies and gentlemen, don't worry. This session is meant for interaction. I mean, we can communicate. We can, it's live, and that's kind of the whole purpose of it, so that we could, discuss something if you wish. If you have any questions, honestly, feel free to shoot at me, because if I know the answer, I'll tell you that I know the answer. If I don't know the answer, you know what? I'll tell you I don't know the answer, but I'll try to find it for the next session. So yeah. Also, just a quick mentioning of our excuse me. Excuse me. Yes, still feeling cranky a little bit. Okay, look, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, okay, the economic calendar. I want to quickly go through it because, again, this week, I'm going to mention a few data sets. So, on Monday, we did have some data from Japan, industrial production, GDP growth rate, which has been, it's a preliminary number, of course, but still looking quite good. Tuesday was yesterday. We had the RBA meeting minutes. Look, nothing major from there, just the same confirmation of what they have done. We know that the bank went for a hike recently, so from all the top major central banks, it was the first one that went actually for a hike. In my opinion, other banks will follow. But let's see. Anyway, average earnings from UK, so wages basically, ladies and gentlemen. UK wages. Now, those are actually showing a little bit of a decline, and that's something that might be a little bit worrying for the British consumer. Yes, because we know that there is a little bit of high inflation in the UK. Employment change, we saw a little bit of a lower number, and unemployment rate came out at 5.2, which is basically higher than the forecast. And if I just jump very quickly into this, and I want to launch the chart just to show you what's happening here. So basically, this is where where we are right now. If you remember during like COVID times, right, when unemployment just rocketed, and but that was understandable. That was understandable then. It was it was a kind of an extreme situation, I would say. Um, Now everything seems to be fine, right? The stock market is rallying. Everything is like the economy is moving, booming, but unemployment is rising. I mean, come on. The FTSE 100 is at all time highs. How? Like how are we getting to this point? So that's where the question arises, and this is where I think that people will slowly start, hitting alarm bells, and especially if we see, a clearance of this 5.3 barrier, because that was the peak. That was the peak, and this is, what has been, what is currently worrying a little bit. So you're in these great conditions, economic conditions, but your unemployment is right. So we need to kind of attribute that to something, right? So what could be the factor in all this? And in a way, one of the factors, of course, is the fact that youth unemployment is on the higher side, and youth unemployment is the kind of one of the driving forces of this. Now, why is there a problem with the youth unemployment? I mean, for some, it could be actually a rhetorical question, but certainly AI is one of those. Because yes, and I've said this before, and I'll say it again. Yes, on one hand, AI is kind of, is a great tool that helps all the businesses save money, you know, cost cutting and everything like that. But we all understand where the cost cutting is coming from, because we don't need to employ more, junior coders or junior HR or junior law graduates, so you don't need them anymore. Now, like, you have super AI, which is helping you to do all this stuff, right? So congratulations to, to the market, for all those businesses that, all those top CEOs which are getting, you know, um, getting these improvements in their balance sheets. However, this, unemployment is rising, so it's not critical yet. But if the tendency remains, then yeah, it will be a problem. Now, look at this. I mean, this is why I've drawn this horizontal line here. This is, like I said, this 5.3, kind of a barrier in a way, kind of like a resistance level. If we surpass that, ladies and gentlemen, I think that, yep, there, I think the alarm bells will start hitting. Bear with me one moment, ladies and gentlemen. I have to clear up my nose a little bit, but yeah, I'll be right back with you. And I am back. Apologies for that, ladies and gentlemen. But yeah, today, probably not not feeling the best of myself. Anyway, look, it is, like I said, it is an interesting story. I mean, we'll see how the markets are reacting right now. We'll see how all different instruments are reacting to all this, but certainly it is it is becoming a little bit of an issue. So yeah, going further down the line, then we had some data from we had some inflation numbers from Canada, which were interesting as well. The core inflation year on year 2.6 came out. The previous 2.8, the headline 2.3 against the previous 2.4. So basically on the lower side, which in a way is a good, in a way, indicator. That the inflation is still near that the BOC's target of 2%. However, again, if the tendency, we already understand that there could be some higher inflation in general. Look, whoever's watching this show right now, can you let me know, what do you think? Are we gonna have inflation like from, let's say, in Canada, in the US? I'm not talking about the UK, but let's say US. Like, are we gonna see above 3%, or what do you think is gonna be the case? Because currently inflation is sitting at around 2.4. Now, it's still within, not far from the Fed's target of 2%, but certainly there could be something like I said, the tendency could be to the upside a little bit. However, again, that's my point of view. You might not agree with that. However, we're all entitled to an opinion. But let me know in the comments what you think. Okay, so yes, so yeah, that's in terms of yesterday. Today we got some inflation data from UK. So UK is kind of one of the hot topics this week on the calendar. Look, first of all, trade balance. I wanted to pick up on that one very quickly. So the trade balance, the forecast was a very kind of bad one. It came out bad, but not as bad as the forecast. So the markets are. We'll jump into indices in a bit, but the markets are kind of okay with that. It seems like that, at least for now. Australia wage price index a little bit on a higher side. Okay, now RBNZ interest rate decision. Now that's what came out this morning. 2.25. They kept the rate unchanged. I think that they will stick to that for now. Yes, their neighboring Australia did go for a hike. However, I think that New Zealand right now is still in this position where they cannot afford to go for a hike, although their inflation is above 3%, so a little bit above 3%, 3.1. So that's why, but Australia's inflation right now is 3.8, so it's basically a little bit above the target of Australia has a target of 2 to 3%. New Zealand has a target of 1 to 3. So yeah, it's an interesting moment that right now we're seeing. I think that the tendency will be that central banks will have to start considering potentially hiking rates, but we'll see. Again, we'll see. But yeah, coming back to UK's inflation here. Look, inflation year on year 3% against the previous 3.4 on the lower side. Core inflation year on year 3.1 against the 3.2, and basically as expected. Now retail price index 3.8. Everything's basically mostly on the lower side. The PPI input output. Those are also on somewhat on the lower side. Yep. So in general, inflation kind of eased off a little bit in UK. It seems like that. Again, maybe it's due to the drop in wages, but again, and also the fact that maybe unemployment is starting to rise. So retailers have to adjust in a way to all this. So yeah, I mean, at this point, I think UK is walking a very interesting path, and it's of course there are some issues within the political on the political side in UK. And you also need to worry about now the jobs, and suddenly you have to worry about people, right? Yeah, look, I mean, for now, I think that we will have to continue monitoring this situation. If it gets out of hand somehow, if inflation suddenly reverses back up, for example, look, inflation year on year, the headline one, where's that chart? Look at this. Now, this is where the issue is. Now, although unemployment is hitting the 2020 levels, where is that unemployment? Yeah, so the 2020 levels, inflation is still somewhat under control, because if you look here, 2022 inflation kind of really skyrocketed here, but there were some issues here in the economy. I think there were some gas issues due to the start of the war in Ukraine. There were some problems with the gas supply and energy basically issue. So and UK is really dependent on gas, and it's importing a lot of gas. So natural gas. So yeah, it's we had some craziness here, I remember. But now look, everything seems to be fine, right? However, inflation is picking up pace again. It's trying to go higher. Look, if it overcomes the 3.85 zone here, I think yes. I think that, or 3.80 zone. I think it will start, raising eyebrows again, and everybody's going to start worrying and hitting the alarm bell. So let's see what's going to happen here, ladies and gentlemen. In terms of tomorrow, we do have the job numbers from Australia. This is going to be quite interesting to watch. We're expecting to see unemployment rate going higher a little bit. So okay, we'll see if that's the case. And kind of then it calms down a little bit, but then we were going to get the Canadian and the U.S. trade balance numbers. So keep that in mind, together with the initial and continuous jobless claims. Look, today, where's that? Excuse me. Was it today or no? Was it yesterday? Today, by the way, we're getting the FOMC meeting minutes, so expect a little bit of volatility. But what I want to say, yesterday, ADP employment change. There we go. So in ADP employment change weekly, so we saw an increase. So in a way, great stuff. Like I said, I do trust the ADP right now a little bit more. It kind of is in line with maybe the idea of seeing US and NFPs. When we saw US NFPs last week popping all the way to 130K, everybody was like, "Wow, great!" The market welcomed. But is this a really good thing? I mean, in relation to where we were like a few months ago, then yeah. But in relation to last year, the year before that, no, it's not good. Again, the U.S. is going through the same issue, the same issue of AI. Yes, on one hand, it's a stick with two ends. On one end, you're helping businesses. On the other hand, you're killing our jobs. So, go figure. Anyway, so going back to Thursday here, look, Australia, yes, we're getting those numbers there. And the trade balance figures together with initial and continuous jobless claims. Ooh, Philadelphia Fed Manufacturing Index. Ooh, keep your eyes on that. That could be a bit of a market mover. And Friday, of course, we're going to get Japanese inflation. It's going to be quite interesting to watch. Or is this number going to, be around 2%, or actually is it going to be a little bit higher? So if it's going to be higher, then it will raise speculation again about that the BOJ needs to go for a hike. So yeah, then we have an issue. If they're going to go for a hike, then it's going to start killing the carry trade, and people might pull money out of the U.S. We talked about this already. So that's why keep your eyes on this number if you are trading something Japanese related. So if we do see a slightly higher number, then maybe Nikkei could actually reverse course back to the downside. So keep that in mind. And the Japanese yen maybe could strengthen at least temporarily. We'll have some S&P Global Composite Manufacturing and Services PMIs coming out from Japan, the estimates. So, and then of course UK again, retail sales. So everything is involving the consumer this week in UK. All the data relates to the consumer, and I mean, we're expecting a higher number. However, if that disappoints, then it will go in a bit of a it will have a negative spin to all. You have your drop in wages, a rise in unemployment, and if retail sales come out on the lower side, it's a bad thing. Why? Because UK's economy is really like 70-80% of the service sector. So yeah, based on that. So if the consumer doesn't feel good, yep, the economy doesn't feel good as well. Okay, so yeah, going further down the line, we're going to be the main probably event will be the U.S. Core and headline PCE figures. Will be the U.S. Core and headline PCE figures. So if those come out, I would say if those come out on the lower side, okay, great. This is where the White House administration probably will be able to rub it into the face of Jerome Powell that he's not cutting rates and stuff like that. So you see your favorite inflation metric is going down. Like, why are you not cutting rates? So yeah, but I think it's a done deal. I think right now it's I said it on Monday. I don't really think that he's gonna go for any cuts before he leaves. I mean, he leaves in May. April is his last meeting. It's not going to happen. I especially, excuse me, especially after the attacks that he received. So yeah, it's not gonna happen anyway. So yeah, this is what we're watching, ladies and gentlemen. Let's have a look at Nikkei. Nikkei is trading higher today. Okay, that's all fine. It's all good. I talked about this area right here between the 56,652 and 58,015 levels. So if we do remain inside this little, I wouldn't say range, I would say range, then yeah, this area, then I will, just continue observing the price action. But if we get a nice clearance, now yesterday we got a clearance, but we failed to, we did stay, but there we go, we reversed, so the data came in, maybe the not so bad, not as bad as expected trade balance came in, that maybe helped out a little bit here, although still a problem. Still, you have a increase in imports, way too big of an increase in imports, and exports are a little bit on the lower side. So maybe look, they're trying to fix the positivity of all the Japanese market, because we know that recently we heard that Japan is willing to go and invest into the U.S. I don't know if this is going to work out very nice, or is it again another just headline for the public to feed on. So yeah, that's why for now I'm watching the tech sector closely. I'm watching what's happening with industrial production and machinery orders in Japan, because those are a key driver of the Japanese economy and exports. So look, for now, looking at the technical picture on Nikkei, I would actually prefer to wait for something to exit, either to exit through one of the sides of this little area here that I've marked. Look, I'm not even touching probably on the Shanghai Composite, because again it's pointless, because the guys over there are celebrating, and they're gonna come back on Tuesday. So yes, keep that in mind. Next Tuesday, yes, of course. So for now, we're watching what's going to happen. In general, the stock market is kind of cautious. When China comes back, I think this is when it's going to be quite interesting to watch. Now, look, Dow Jones Industrial Average. Yesterday, it ended up in a bit of a profit situation here. Very fractional, very, very fractional. Nasdaq was the bigger winner, and followed by the S&P. So Dow is, it like I keep on saying, it's always the same thing. Either Nasdaq or Dow will be the leader or the loser, and then the S&P will always be somewhere in between. There we go. That's what we get all the time. It seems like that. Actually, not all the time. Most of the time. And yep. I think that this is something to kind of keep in mind. And look, for now, purely from the technical perspective, I said this before, that if we do fall back below the 49,621, I'm going to lean a little bit more towards the downside. And at the moment, well, it seems like it's still holding. This barrier is still holding. That's the high of the 7th of January. Now that's that's a previous all-time high way back ago. However, it has been a good area of resistance. We saw the tests of that area several times, failure to break it, and then eventually we broke it on the 6th of February. Went higher. We went for a new all-time high on the Dow Jones Industrial Average, and then we started reversing back down, and we fell back below this key area of now at this point it's support, and we fell back below it. So in a way, what I can say here is that I am looking at this very carefully here, and yep, if we do remain below this hurdle, below this 49,620-21 zone, then yes, I will lean a little bit more towards the downside, especially if we fall below the 20-day SMA within my Bollinger Band here, and that could strengthen the downside scenario. For now, if we're looking at higher levels, then certainly I'm keeping an eye on this area right here, and if we do climb back above this, look, in general, if we do climb back above this 49,621, great, I'll go to the upside. However, I think that maybe just to be a little bit more on the safe side, if you are looking for some higher levels, then wait for a push back above the 50,115. That's the inside swing high of the 10th of February. Basically, this is when we had the all-time high tested. And if we do climb back above this, then yes, I will consider a little bit of a move higher. The S&P 500, we're stuck in a range. We're stuck in a box here, and until I get out of until I see that we're getting out of this one, yep, I'm not really touching it because this is way too shaky, way too. I don't like ranges. I will, I'll tell you straight away. I like the breakouts from the ranges. Hey, everybody has a preference, right? So, long story short, for now, it's the option here for me is the only one. Either I wait for a drop somewhere below the 6,770 territory. At the same time, we fall below the 100-day EMA shown as the blue line. And if we get that, great. I'll go lower. For the upside, a push above the 7,000 territory somewhere here. The psychological 7,000 mark. If we clear that and we stay above that, then yes, great, I'll go higher. Now, somebody might say, but hey, Darius, it's a little bit of a wait here, a little bit of too much waiting. Look, if you're really impatient and you want to see, some action within the pattern here, then maybe, just maybe, this area, the 6,870 territory could be a nice one to watch because recently we saw some holdups here. So if we do kind of clear this area, this 6,870, then yes, great. I think at the same time, more buyers could join in because we could also break above the 50-day EMA shown as the green line right there. NASDAQ is flirty. It's very, very flirty with the 24,455 territory. Now, yesterday I marked this area. I talked about it and said, like, if we do kind of stay, not yesterday, on Monday I said that. If we do stay above this 24,455, okay, maybe we're not willing to go lower yet. But if we do drop again and stay below it, then hey, this is where the interesting bit comes in. Now, the price structure, the way everything is shaping up here, it looks more bearish than bullish because, you're having lower highs. You're kind of trying to go for that lower low. So everything is kind of a little bit pointing more towards the downside. However, we need a break here. We need to see a break below this 24,455 area, and then we'll take it from there. So yeah, keep that in mind, ladies and gentlemen. Ladies and gentlemen, let's have a look at the German index DAX. Opened up with a gap to the upside. There we go. We climbed above the 25,000 and kind of, let's say, 100 zone right here, right? So we climbed and stayed above this. And the question for me right now is, what's going to happen next? I mean, are we going to see, in the next move here towards the highest point of January, which is basically the all-time high? Are we going to see a move there? So I'll stick to this idea that as long as we stay above the 25,100 zone, if we continue to trade above that, then yes, I will aim for the upside here. The FTSE 100, ladies and gentlemen, looking good. Look at this. All-time highs, honestly, on the FTSE. All-time highs on the FTSE, and it seems like it's unstoppable. I mean, I don't know. It's just, flying higher and higher, and 10,611. What did we reach here? 11? No, yeah, almost 12. So as we speak, the FTSE here right now is creating all-time highs. Now let's see how far this can travel, because at the moment it is very difficult to understand here that why if the numbers from the UK are not the best, why the FTSE is rising. Well, maybe because the FTSE 100 consists of companies which earnings are kind of made abroad mainly. So yeah, so that's why I mean it's not really kind of a reflection of the UK economy. It's more of like how these UK companies which have their exposure abroad, how are they behaving? How are they doing? So at the moment it seems to be like they're doing fine. However, they're not really resistant, to the global economy and what's happening globally. If the whole market starts to feel the heat, if the FTSE eventually could actually reverse course as well. But at the moment, look, everything is flying higher and higher, and so okay, look, I mean, I'm not complaining, right? I mean, but I will stick to my words. Whatever comes up must come down eventually. Let's jump into DXY dollar index very quickly. This one's stuck, and honestly, I do want to understand like what it wants to do next, because at the moment it's just a pain in the bottom, and there are some levels that I'm watching, and I've just redrawn this. I mean, I think that 98 territory is the one that I need to kind of keep an eye on, and the 98 territory is, like I said, probably the gateway towards higher areas. Now, if we do clear that 98 territory, yes, I'm going to go to the upside. I'm going to aim higher, and my next target will be this 99 kind of in a half territory, somewhere around here. But am I a strong believer in the strong dollar? No, not really yet. Not yet, because I do believe that the White House administration needs a weaker dollar, just because, again, they need to improve their exports. They need to attract businesses into the U.S. And kind of for businesses to build factories in the U.S. Create jobs. So you need a slightly weaker dollar. And and that's why, I don't know, like I said, I am not a strong believer in the strength of the US dollar right now. Let's jump into the forex world, ladies and gentlemen. The look, AUDUSD, we're getting data from Australia, and we are getting some key numbers. And look, for now, I would say this way: AUD seems to be performing quite well, still holding up quite well, mainly because it's a risk currency, and everything right now is surrounded by the fact that the stock market still overall it's still okay, it's still positive. So, and commodities are also somewhat in demand. Yes, we're seeing gold and silver a little bit on the lower side, but still they're elevated. They're still on the higher side. I did a little piece on yesterday on our channel here, so you can check it out. You can go on our YouTube channel here. This one here: gold, silver, platinum, and palladium. A quick short-term TA, so technical analysis. I did that yesterday. So I think, like I said, it's I've expressed my opinion there. Go check it out. Hopefully you'll find it useful. It's a short one, so not like my MarketsTalk webinars. But hey, MarketsTalk webinars are live. That's recorded. So long story short, look, for now I'm watching this 0.7055 territory. If we do drop and stay below it, yep, I'm gonna go lower. For now, I'm just observing the price action, and I do understand that it could potentially lead, maybe like this could be forming something like a head and shoulders pattern. However, I don't want to rush into the conclusions yet, okay? Because for now, I just want to see if this is going to work out or not. And if we do kind of push above the 0.1794 territory right here, then great. More buyers could join in. For the downside, 0.7055 area is something that I'm watching. So hopefully, a breakthrough one of these levels could happen, so that I could, kind of get a little bit more happy with this one. AUDNZD, one of my favorite ones. There we go. AUD is popping strongly. The NZD traders, NZD bulls are not loving the outcome from the RBNZ interest rate decision. So there we go. We're seeing some weakness in the New Zealand dollar, but Australian dollar is the one that is performing right now, and I think that it could continue performing quite well as well. AUDJPY. This one is our risk on, risk off monitor. We understand that it kind of shows what's happening in the stock market as well. It's kind of this risk sentiment, but on one hand it's all positive, but the positivity is not crazy. It's just like barely hanging, and this is where this upside line taken from the low the 6th of November kind of indicates almost correctly. This is actually a good chart showing what is actually happening with our economy, because it is positive overall. You know, you have a trend to the upside, but is it crazy going higher or something? No, not really. It's just like, you know, like I said, it's just barely hanging. So again, I don't want to say anything else, but like I said, it is a good representation of the global economy right now. So look, I'll go for the upside if we do push back above the 109.37 territory somewhere here. Then I will keep an eye on the 110.79, and then we'll just take it from there, ladies and gentlemen. So long story short, for now, if we do remain above this 109.37 territory, then yes, great, I'll go to the upside. Let's have a look at EURUSD, ladies and gentlemen. What's happening here now? This one is interesting, and it's not feeling the love today, mostly because Christine Lagarde came out with a statement saying that that she might be leaving a little bit earlier than, you know, well, I think, I can't remember, was it September, something like autumn of next year. I think November, September or November, something like in that region, and she's planning to leave. So, you know, she's saying that, I heard that she's saying that initially it was supposed to be like an 5-year term, but then it kind of extended a little bit. So I'm just trying to find right now when did she join in, president of the European Central Bank. Yes, so she joined since 2019, since November 2019. Okay, look, I think that yes, she said that it was supposed to be like a 5-year term, but now like they're trying to say that it's going to be 8. I mean, who's trying to say? As I understood, it was Macron and Merz, the German leaders, German and French leaders. So I think that she's going to depart a little bit earlier, and you know, I think she's kind of fed up with everything. So can't blame her. The market, everything is, you know, probably she's tired. She wants to just chill for, you know, for the remaining of the years, which is fine, which is logical, and she did her best. I think that you know, she was a great candidate. You know, at the time, everybody kind of loved her, and some still do. Some have, of course, you have critics who don't like her, which is, you know, fine. You can't please everybody, but overall, I think, yeah, she was, you know, she was doing her job, and but I think, you know, she sees that there are problems ahead, and doesn't really want to get involved, you know, with all this digital euro as well. You know, nobody wants to kind of be on the bad side of the, you know, of the public eye, and yeah, it's understandable. Anyway, so looking at the technical picture here on the Euro USD, what I'm seeing here is that we broke below the 20-day SMA here on the within my Bollinger Bands, and now we're shifting a little bit lower. Now, it's not that I'm going to get bearish right now very much, no, because my bearishness will come on a drop below the 1.1776 territory, because I do not, like I said, I do not think that, you know, this is, we need to start, you know, panicking here and selling everything, unless we get a break here below this 1.1776. Why? Because then a forthcoming lower low is confirmed. But here, still, you know, maybe it's a very ugly, prolonged bullish flag right now for me. So, you know, you can't say. So that's why I'm not in a rush at the moment. I'm just observing the price action. So if I'm leaning towards the upside, to be honest, I will take a very conservative approach, and I would wait for a push somewhere above this barrier, somewhere above this 1.1926, area, and then we'll take it from there. EUROJPY, EUROJPY is at an interesting spot here as well. We did you know, we're seeing a little bit of a stalling moment here, a little bit of consolidation. I like this pair, but I'm waiting for a clearance. I'm waiting for a clearance below the 100-day EMA shown as the blue line here, and then I'll take it from there. Also, some levels to watch: 180.40, 180.14. Something to keep in mind, but yeah, should certainly watch out for this little area right here, this 180.81. If that gets cleared, wonderful, more sellers could join in. Okay, so look, let's jump into GBPUSD now. This one is interesting just purely because of the data that came out. So look at this. Yesterday we had a major decline here at one point, and on Tuesday here, look, we had those numbers, right? We had those job numbers from UK, and look at the reaction that we got. Boom to the downside. Look, I talked about this pair before, and I will say it this way, that we are stuck currently between the two trend lines, and between the two trend lines. And look, is it excuse me, is it gonna do we need to do anything right now? In my opinion, no, because I want to observe this one, because it could, you know, bounce around here, and we could be seeing something like a coiling up moment, and you know, it's like I said, something to keep in mind for now. So long story short, I would say just wait for clearance, you know, wait for a break of the downside line, a push above the 1.3591, and then yes, more buyers could join in. For the downside, 1.35 is the psychological level that I'm watching, and if we do get a nice drop below the 1.35 area, I will consider a little bit of a move to the downside, to be honest. Let's have a quick look at the USDCAD because I need to jump into the commodities. Look, USDCAD is very interesting here. It's kind of, I talked about this on Monday, and I warned you kind of about this, and I said, look, maybe we are forming a, you know, something like a triangle pattern. If so, that means we're getting into a bit of a squeeze, and meaning that we could see, you know, some sort of a breakout at some point later on. But we look at the prevailing trend, and you know, if we're trying to understand where the breakout could happen, then the greater chance for the breakout is to the downside, actually, despite the move that we're seeing here right now to the upside. But the prevailing trend is to the downside, and in a way, this is like a little consolidation area, and then kind of a continuation. It's like a continuation pattern, you know. It just stalls here, pauses, gathers all the other bears, and there we go, they attack, you know, and we see a breakout here lower. So yeah, I think I will keep an eye on this area on the downside. I'm not gonna go crazy to the downside, no, but certainly certain lower areas here I will be watching. Let's jump into USDJPY. Let's see what's happening. It's an interesting pair. I mean, we're seeing a little bit of retracement back up, and I do believe that we could see a little bit more retracement back up. So yeah, it's I'm gonna keep an eye on this downside line. I will consider right now a bit of a higher move within this, you know, this kind of formation here. But overall, I do have to accept that, you know, maybe, you know, the yen will pick up buying interest if the stock market does reverse lower. So keep that in mind, ladies and gentlemen. However, if we do break the downside line, hey, great, wonderful. I will go to the upside. So USDCHF, it's getting into a bit of a squeeze, and again, also we look at the prevailing trend. The prevailing trend is to the downside, so the greater chance for this one is to break out lower. But again, we're waiting to see what's going to happen. Are we actually going to get that breakout? So let's not rush into conclusions yet. Okay, maybe we'll get a break through the upper side. Maybe we're forming here something else, not like a triangle like this. And you know, if you know, maybe we're forming like an ascending triangle. However, still, if we look at the prevailing trend, you know, we'll see that it's to the downside. So I'm still kind of leaning towards lower levels on the USDCHF, but confirmation breaks are needed. Gold, let's jump into commodities. Look, I talked about this yesterday, and in the session here, You can check it out. But I also threw out this piece on Monday for our VIP customers. Basically, we're currently stuck in this little, I wouldn't say, like, it's not a range. It's like something like a box here, but I think maybe it's, over exaggerated here a little bit. I think the box should be drawn a little bit this way here. There we go. So we're currently stuck in this. And I said that if we do drop and stay below the 4,878, then okay, great. More sellers here could join in. But if we do push through the 5,092 territory right here, okay, wonderful. More buyers here could join in. So at the moment, I'm still kind of leaning a little bit more towards the downside, to be honest, because look, after we had a great drop here, big drop here to the downside, then we started correcting back up. So this kind of formation looks more like a bearish flag. Okay, and but if it is a bearish flag, then I would say you need to wait all the way, for a clearance somewhere here near the 4,400, or at least maybe start at 4,655. But you know what? I think that we could actually start looking at it a little bit earlier. So if we do clear this 4,878 territory, which has been a good area of support, by the way, if we do clear that, I'll go lower. But for the upside, 5,092 territory is the one that I'm watching. Silver. Silver is drifting lower overall, but I have to admit that this one looks a little bit more positive. However, look how I'm playing this game here. I'm leaning a little bit more towards the downside in gold, and I think that if gold drops, then it could drag silver a little bit further south. Currently, it's within the falling wedge in a way. It could be the case. I don't know if maybe it's like a falling channel, somebody might say, but either way, falling wedge, falling channel. Yes, the short-term direction is to the downside. However, if we look at one of my favorite patterns is whenever we have a strong decline and then a gradual decline, it tends to reverse back up. So, but again, for that idea, we need to see a break of the upper side of the of this little pattern here. Just a quick glance at gold and silver ratio. Yep, stabilizing. Gold is, grabbing the crown back again here. Let's see if it can hold. Platinum, very quickly, a similar story as with silver, within the possible bearish formation, like a falling wedge. However, at some point it will break out here to the upside, most likely. But at the moment, I'm leaning a little bit more towards the downside. Palladium within the falling wedge here as well, or actually falling channel more. So yeah, it's I think falling wedge. There we go. So yeah, I think for now it's an interesting one here. So let's not rush into conclusion yet. Yeah, and it is really tempting to go long, but let's for now wait a little bit. Let's see what's going to happen with gold and silver. Copper, very quickly. Yep, found good support near the 1,156. Let's see if it can rebound back up. Very quickly on my beloved sugar, there we go. It's still trading below the psychological 14 level. So in a way, yeah, it's in a way for now it's just it's more of a downside scenario, unless it somehow climbs back above the 14 zone and stays above that. Just a quick glance on soybeans. Soybeans are pushing strongly back up. Let me just refresh this. Actually, let's have a look at the okay, so this is the monthly, and let me remove all the drawings. So this is the monthly, and we have approached some key areas. We cleared, actually. We had in January we had a test of this area which is roughly between 10.78 and 83 levels, but then we cleared the this barrier, and now we're pointing much higher. So I think that, judging purely from the technicals here, it's kind of leaning towards the upside. So let's see if we can overcome this obstacle, the 11.32, and if we can continue to trade above it. So if we can, great. I think more buyers could join in. WTI oil, ladies and gentlemen, they're drifting back down. Of course, the tensions between US and Iran kind of calm down a little bit, and you know, you can see this in oil, and I do believe in you know, in weaker oil, and I do believe that because I think that they, you know, the White House administration doesn't need high prices in oil right now because it's just gonna, you know, make matters worse in terms of bringing businesses to the U.S. and you know, and also you're gonna be, you know, benefiting major oil producers who are who you are not a very fan of, and yeah, it's, you know, it's kind of it's one of those moments. On one hand, you really want to bomb the you know, Iran because, you know, because you can, but on the other hand, it's, yeah, it's you don't want to see higher oil prices. Well, then you have to choose, you know. I think that it's better not to have higher oil prices, in my opinion. So yeah, coming back to the WTI oil story here. Look, this is working out nicely. This curved move to the downside. I'm gonna stick to the downside as long as we stay below the 200-day EMA, shown as the white line here. If we continue trading below that, okay, great. I'll go lower. Natural gas. Natural gas is approaching this psychological three level again. So I think that if we do eventually drop and stay below that psychological three level, ladies and gentlemen, I think further declines here are possible. And look at the area that we have. You know, we could fill potentially 2.62, 2.77 levels are quite interesting. Okay, ladies and gentlemen, and let's kind of sum up everything with the crypto world. Look, Bitcoin. Bitcoin right now is waiting for the next catalyst. We know it doesn't know what it wants to do. Nobody knows do we want to break lower, or actually do we, you know, do we want to go to that 55 territory, or like actually around 58,500? So do we want to go there, or actually do we want to just chill, you know? So chill and reverse back up. We had like 1, 2, 3, 5 straight months of losses on Bitcoin, going from 120. You know, for those who are like, oh, Bitcoin's gonna go to 200,000, I need to buy it at 100. I will stick to my words. Whatever comes up must come down. There we go. Is this enough of a retracement? Let's check with our Fibonacci retracement. Look, I think that this is where the 58 with a little bit is a good target, because that's the 61.8 on the Fibonacci retracement, which is drawn from the lowest point of 2022 to the highest point of 2025. There we go. We've tested the 50. We're currently below 50, and I think that yes, the 58,000 and maybe and a half could be a good target, good next target. But again, let's see what's going to happen. Let's not rush into conclusion, okay? Because, you know, everything can change very quickly. We are currently on the 50-day EMA within here on this monthly chart. So yeah, it's also a good potential area of support. Bitcoin Cash, my beloved one. Look, it's currently forming something of a bullish flag. So is this going to be correct? I don't know. We need to wait for a clearance of the 572. We had a few times a push through it, but we are struggling to stay. I need to see this body of the daily candle staying above the 572 territory. Ripple very quickly. Okay, look, this one looks a little bit more positive than negative, to be honest. But again, I'm, you know, taking everything with a pinch of salt, because if Bitcoin does want to go, you know, to that 58,000 territory, then I really don't think that other cryptos, maybe some small ones, that, you know, those will go much higher. So for now, it's a stalling moment. I don't think that, you know, I think it's one of those moments where if you do have, let's say, if you do want to invest into cryptos, for example, right? So, you know, you allocate a portion of, like, I don't know, 10% in, and you put it in this one. It goes against you. You keep on buying. You keep on buying if you do believe in the asset. So you scale in this way, because if you're gonna go just buy right now everything and it still wants to drop lower, then yeah, you're not gonna be very much satisfied. Ethereum. The interesting part here when Ethereum is that we are climbing back above the psychological 2000 zone. And what's interesting here for me is that we are forming something of a squeeze here a little bit, and if we are currently forming and this looks a little bit more bullish than bearish. However, my problem is with the prevailing trend was to the upside before entering this formation, but it's not a strong one. It was, it was part of a decline actually. So is this going to outweigh this? Let's wait. But in general, Ethereum is at a very interesting spot, so keep that in mind if you are trading cryptos. Yep, definitely one to watch. Ethereum Classic, also a similar story. We're just kind of stuck here, and we're still trading above the psychological 8 level here. So as long as we stay above that, there is a chance of going higher. But with higher, I would actually prefer to wait for a push above the 9.15 zone, and then we'll just take it from there. Litecoin. Okay, Litecoin is. I like Litecoin. I'm sometimes biased towards it actually, but I do like Litecoin. However, I would still prefer to wait for a push above this barrier right here, the 54.95 zone, and if that's the case, then great. More buyers here would join in because a forthcoming higher high will be confirmed. Dogecoin very quickly. We had a great run. Now I just need to see a push above the 0.1175 territory somewhere around here in order to get comfortable with higher levels. Polkadot is also at an interesting spot. It's kind of flirty here with this 20-day SMA within the Bollinger Bands on the daily chart. So if we do clear it, I'll go higher. But if we don't, yeah, I think another drip back down here could be possible. And finally, Tron, ladies and gentlemen. Tron is one of my favorite ones. Now, this one will become a currency in my opinion, but hey, we'll see. Look, for now, it's that we had a correction moment here to the upside. Can we see a little bit of a decline? In my opinion, yes. But these areas here are quite strong and quite supportive. So if those get cleared, actually, now that's where I will consider a larger move lower. But at the moment, we're stuck here and we're not far from the upside. But again, for the upside, a push above the barrier here, the 0.2852, I think is needed. So if we can get that move, great. More buyers here could join in because a forthcoming higher high will be confirmed. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I hope you found this useful. I tried to be sorry for the voice and maybe the less excitement in my voice because again, like I said, I'm not feeling my best, but hey, I'm trying to deliver the message on the markets, and hopefully you found it useful. So let me know in the comments what you think. Don't forget to like and subscribe, the usual stuff basically. But hey, I will see you on Friday. I'll see you on Friday, and as always, the same time, same place. Yep, like I said, don't forget to subscribe, and this way you won't miss any of my videos, upcoming videos. Ladies and gentlemen, thank you, and I shall see you later. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine.